guys, in this video, we're going to examine the overall markets and give you guys some key levels to look at going forward. Now, what happened today? Well, to me personally, I would say that the past 2 days have been outlier events. Why? Because they're based off of news. They're based off something that happened and they were reactionary. The markets reacted to that certain event. You can argue to me all you want, say, oh yeah, an 80-point move since November in less than 6 months was due for a correction. I agree with you 100%. We were overextended. Yes, 100%. We deserve this. Yes, we did. I agree with you 100%. But still, my assumption when I'm looking at these past 2 days, these are outlier events based off of something that's, I wouldn't say binary, but is very, very much news based. This happened, market reacted. Now, going forward in the Qs, what's going to be our levels to be looking at here going forward? Well, 303, 308, 298, 293. You can argue 300 because that's a nice big round number. And we kind of struggled getting there earlier in the year. But still, 298 has all the resistance and kind of that's where all your support was in the past. So 298 is going to be our next big support. Now, why is this a good thing of what happened today? Well, because to go forward, obviously we can't just shoot straight up. And really, we were overextended, but we wanted to consolidate and we wanted to get the RSI and stochastics low. We've been saying that the past 3 or 4 days, hey, RSI is oversold, RSI is oversold. Well, now we finally have stochastics to back it up. So stochastics down here under 10, that's good to see. Plus with our low RSI, we are severely oversold in here now. That's great. What happened last time stochastics were this low? Well, guess what? What happened here in November? Boom, down here, nice pop. Happened again in September. Stochastics down low, boom, nice pop. So going forward, it might not be an immediate move up, but we are severely oversold and a little consolidation down here and a nice pop above the 300 or above the 303, that is, and we're back in business. Volatility is a trader's best friend. So what happened today is actually a good thing. That sounds dumb because our portfolios probably say otherwise. But volatility is a trader's best friend because why? We want to take advantage of price fluctuations and price skews in our options contracts. Contracts have time value. They are forward looking. They're all about speculation. When volatility increases, fear or greed, whatever side you're on, the options contracts prices will expand and contract as well. So then what we want to do is we want to take advantage of that. So right now, great dip to really purchase anything. And our options contracts in April, IV is kicking in. So hopefully we can get a nice little spike here going forward, and that's only going to expand our IV to the call side. So we're fine with volatility. We're perfectly fine with what happened today. And we want high IV going forward. We just want it to the greed side, not the fear side. So let's compare the Qs here to the spiders and what happened today. You can see our key levels are going to be 380, 385, 371, and 363. There's going to be a 375 in here somewhere that we might find footing or we might have a trouble breaking. I'm not sure. But today we've been harping on this 50-day moving average for the past 2 weeks. Like, guys, either we're going to touch this at some point, we're going to cross it, bounce off of it, whatever. Finally been kind of coming down here and messing with it. Something was up when we couldn't really break the 392s, and then all of a sudden that turned into 390s. And then today we were riding the 50-day moving average, and then after Jay Powell spoke, boom, just kind of a breakdown. And then we went down and we touched the 371, and now we're off of it. So going forward, how do these two charts compare to each other? Well, look at the RSI here on the daily for your spiders. 32 and your stochastics are going to be 27. That's interesting because the Qs were lower, right? The Qs we were under 30 and then we were under 10 here for our stochastics. So what does that mean going forward? Well, that means that the Qs are probably going to consolidate and rip up faster than the spiders are. So the overall market compared to the NASDAQ and tech, the market's going to be lagging tech here coming up really, really soon, I think. So that's going to be something interesting to watch. So we're going to see I wouldn't say an actual schism, juxtaposition, whatever you want to call it, but it's going to be interesting of how tech moves because basically, if you remember in COVID, tech kind of moved the whole market there for a minute, especially when COVID happened. So it's going to be interesting to see if that can do that again. We have to watch gold as well because if you remember from our earlier video, we talked about the spiders. Gold's going to have to move to get a nice move in the markets higher. But again, what's happening today in the overall market, this does not remind us of what happened last year in Corona. This reminds us of what happened before the spiders broke 300 for the first time in 2019. Again, messing with the 50-day moving average, going to break below it, going to come back down, going to break above it again, and then boom, finally going to go up and try to break the 400, because that's exactly what it did when it tried to break 300. We messed with the 394s, or the 294s, 292s, under the 50-day, over the 50-day, back above 300, back down to the 50, and then again. So I think we're just kind of repeating ourselves, and it's all about the yields again. It's all about the weak dollar. It's all about gold. So it's going to be really interesting going forward to see. But again, I am not comparing anything that I'm seeing to coronavirus last year. And again, if anything, this volatility is going to help us. We can look at the VIX real quick, just to kind of break down volatility. You can see that volatility has overall been higher, of course, ever since coronavirus. So anything above 20 is always considered high. Anything above 15 is considered high. And we've been above 20 this whole time. That's fine. We love volatility. We'll take that. We even love it up here. We just want it towards the greed side, not the fear. And what's interesting to see here on the VIX daily, we do not want to see this purple 50-day moving average cross over the 200-day moving average. That's going to be a bullish sign for the VIX, but I don't think that's going to happen. I think we're just going to get really tight and consolidate, because we've been expanding a whole lot here. November, you can see February, March. I think that's not going to happen. We're going to get close, and then we're going to kind of expand back down and go back to 20. But that's fine. We'll stay above 20. I will take that, but we want it towards the greed side, not the fear. That's only going to help us in our trading. We're going to see some nice sharp spikes up here soon. That's going to help our call premium in our longs, especially in April, May. We have plenty of time in all our April and May contracts, so nothing to be too worried about in here. You can see that it looks like we're getting ready to consolidate in the VIX as well. We'll see if we can hold this 200-day moving average. I don't think we will, but it's just going to be, again, it's all just going to be interesting to see. We have stimulus news coming up, so we're seeing what the market is pricing in and what the market wants to see going forward, and how reactionary the markets will be just in general going forward. But again, Q's probably going to be ripping up faster here soon. Severely oversold tech is. With that being said, right now we have the SPOOs down 11, NASDAQ's down 55. So we're going to see what happens tomorrow. A late afternoon pop and red to green move tomorrow would not surprise me one bit, especially going into the weekend. I think all the bad news is behind us. I don't think it's going to be a bloody Friday. I think it's just going to be kind of I think we're just going to consolidate a little bit and then might get a nice green move higher end of day. So again, that's just my 2 cents here on the market going forward. Nothing really to be super worried about. If anything, we're just welcoming the volatility with open arms. All right, guys, thanks for watching. Make sure to check us out on our social media. We have attached the links to our socials in the description. We also have a swing trading service if you're interested. There's more information in the description below.